Alright, guys, Crypto Bros, some of you need to stop living in your little bubbles and come out to reality. I know when I made the last video last night, some of you were like, I came here to watch crypto. Why are we talking about geopolitics and other things? Crypto is separate from all of that. No, it's really not. Crypto, in the last 4 years, has been integrated more into the mainstream economy, especially since ETFs and especially since institutions have actually come in. And this was inevitable if you wanted crypto to grow. If you wanted crypto to become your like niche little thing, that's one thing. But if you want crypto to grow to be worldwide and adopted, it was never going to be like that niche little thing which was separate from everyone else. When you have a couple $1 million or maybe $1 or $2 billion in crypto, it can be separate from the rest of the economy. When you're talking about hundreds of billions or trillions of dollars, that's not possible, because the big institutions are going to become interested and more mainstream people are going to become interested in as well. And it takes the big institutions to actually propose these financial products for the mainstream people to be interested. And that's what you actually need to grow the market. You can't just grow the market without the mainstream investors. There's only so much you can actually grow with 2% of the population in crypto. And if you want more than that, you actually need to adopt more mainstream people, which means you're going to wrap it in world events as well. I know a lot of you want to pretend that crypto is somehow a hedge against the dollar. It's really not. Most people treat it as an investment product, and that's how the world sees it. And that's how it's going to act in relation to world events. It's a risk on investment product. I've said this during my stream multiple times for those of you that watch, but some people still really don't want to believe it. But that's really how it reacts. You've seen crypto react very differently from gold in the last couple of months as global tensions have actually mounted, as inflation fears have mounted. Crypto has actually gone down while gold has actually gone up. People see gold as a reserve asset, and despite the creation of the strategic crypto reserve, which by the way, most Americans actually opposed, people still do not see Bitcoin as a reserve or hedge asset. They see it as a risk-on asset, which is why when global tensions raise, when the price of oil is assumed to be going up, or when inflation is assumed to be going up, even though the last readings were actually pretty good, crypto tends to go down because in a volatile market, less people buy risk-on assets. And that's how you can tell that people still see crypto as a risk-on asset, because less people buy it in a recession environment. And like the stock market, it kind of heads the same way as the stock market, just in a more accelerated fashion. When the economy is going up and the stock market's going up, the crypto market's going up. When the rates are down, both the stock market and the crypto market benefits. When rates are actually up, both the stock market and the crypto market basically doesn't go up as much or goes down even further. So that's what you have to realize. It's essentially an extrapolation and a more volatile version of the stock market. Now, cryptos aren't stocks. They're not securities. The SEC has said that. But most people do invest in them that way as if they were. So you've got to pull your head out of the sand, stop pretending that crypto is detached from everything else and can be measured by, your little TA movements, because they really can't. Basically, especially when one tweet from Trump can make it dump 2,000 or 3,000 points, and one fart from Jerome Powell can make it pump or dump as well. A lot of it actually hinges on if Jerome Powell sounds bullish or bearish tomorrow on future rate cuts. He'll probably sound neutral, honestly, but if he sounds bullish or bearish, it's going to go up or down. And I can guarantee you that Donald Trump and Jerome Powell do not read your TA charts, so they don't really care what your TA says. And realistically, I've watched several TA influencers. They've been pretty awful in their probability projections over the last couple of months. Because especially since the new year, because many of them actually thought we were going to go up. And before that, there were a lot of big influencers that used TA that thought we weren't going to get past 70,000 or 90,000. And then after we actually got past 100,000, a lot of them thought we were going to go past 150, 120, 150, and they've been just as bad as just about anyone else. So the chart reading hasn't really worked for most of those influencers. Obviously, they kind of make you forget their past predictions or their past projections or their past probabilities. by adjusting their probabilities as they are wrong. I mean, you look at some of the guys that said, like, we weren't going to get past 76 or 73. Then we weren't going to pass 93. Then, like, after we got past 100, like, we're going to get to 120 or 113 before we turn back. I don't think any of those numbers hit, because we actually hit about 108 and then turned back. And we've basically been at the mercy of tariffs. And of course, with the recent situation in the Middle East, which can affect oil prices, that can make prices go down as well. Essentially, we're basically at the whims of what Donald Trump tweets tomorrow and what Jerome Powell says tomorrow. If he says he's going to increase tariffs more, we're going down. If the other countries basically say we're going to retaliate more, we're going down, because that's generally detrimental to the economy. And of course, like with the interest rates, that's very important as well. But crypto in the last 4 years, because there's actually institutional investment and a lot of like mainstream investors have actually come on board, that basically means like they're following the rest of the market too, and that makes us follow the rest of the market. It's not just a couple of crypto bros anymore that are trying to move the market. There's like massive leverage from both institutions and mainstream investors that can move the market a lot more. So if you still believe and you want to stick your head in the sand and pretend that cryptos isn't affected by all that stuff and it's only like what your chart says, that's fine. But that's not what's really happening out there as it gets more integrated into the overall market structure. It's been happening for the last 4 years. This is not 2015 anymore. This is 2025. The amount of money that we're playing with is a lot bigger. The amount of players that we have is a lot bigger. And even if the big guys manipulate it like they do, they will still manipulate it according to market confidence and consumer confidence, because they know they can't really fight against that when it's all said and done. They might amplify it, but they can't really fight it. And people who have tried to fight it have failed pretty miserably. So yes, you have to look at all the geopolitical and macro factors now when you actually try to make crypto projections, not just a chart, not just graphs, and not just like crypto is its own separate thing. And then no matter what the economy does, it's going to do its own thing, because that is not true and really hasn't been true for the last 2 to 3 years. So yeah, please take your heads out of the sand if they're still in the sand. Go out of your bubble and realize that you have to understand more things to actually project crypto now, which include things beyond the crypto market. And that's what I'm going to keep on reporting on, because it's not just about which partnership your specific coin actually has, or like which partnership your specific coin has, or like, what Michael Saylor has done. There's a lot more forces that are actually influencing crypto that are way beyond the crypto market. And if there's a huge geopolitical happening, or there's like a huge tariff trade war movement, it's going to affect the crypto market a lot. Like, I feel like if Donald Trump didn't impose any tariffs, we'd be at 120K right now. But since he did, we're stuck at 80 something K. And we might actually not move up because of the effects of those tariffs. And if he actually puts out more tariffs, we're probably going to go down even further. The whole sell in May and go away thing might not work that well, because we don't have a pump in May to actually sell. And that's especially true for alts. Bitcoin still has the ETF holding up a little bit, but alts like the Ethereum ETF didn't really generate that much demand. And the rest of the alts are just a little bit screwed at this point, and we need like more retail investors to come in and pump it up, and that's generally not happening right now. So please take your heads out of the sand if you really want to understand like what's happening in crypto. It's not just dependent on our market alone. It is integrated into the rest of the economy, and you will have to understand a lot of macro factors if you want to get a better understanding of crypto. So that's what I have to say for today. Like and subscribe, hit the bell notifications button, and I will see you guys later.